Home loans spike by over 240%. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. We're going to have a look at this article from Mortgage Business discussing the significant spike in home loans, which, well, isn't at all surprising. They spiked by 248% in 20 years. What does that tell you about our culture and our society? Yeah, that's not surprising in the slightest. So Tasmania has recorded the biggest fall in housing affordability, with average home loan amounts rising by over 340% in the last 20 years. 340%. I worked for an architectural practice that had their head office in Launceston, and I remember going down there. It was a beautiful city, Lonnie. Love it. Very cold. But I remember seeing how much property costs down there, how much houses, beautiful houses they could get down there. Yeah, it's just, I was very jealous coming from Brisbane. And it's gotten even more. Well, actually, it's not, to be honest. Let's bring this up. We'll go here to asking prices for property, and we'll have a look here at Brisbane. Come on, Brisbane. Reload. We'll bring up Hobart. We'll have a look. There we go. This is the Brisbane asking prices. We can see how high it is, everyone. Now, if we have a look at Hobart property, which should be coming up here, we'll just click on there. There we go. There's Hobart. You can see how much that's climbed as well. Look at that growth, guys. Is that sustainable? Oh boy, the Australian dream. The Real Estate Institute of Australia, their housing affordability report, which covers the past 20 years, has revealed that the proportion of family income devoted to meeting average loan repayments has increased from 27.2% in 2001 to 35.7% in 2021. Okay, now that is a concerning percentage, because the fact this is sort of that the family income to the average loan repayments is now over 35%. Now, if we have a look, I'm going to bring up a definition here of housing stress, everyone, because, well, these people would be in housing stress. They meet this definition requirement here, the average person. So, housing stress is typically described as lower income. So if you're a lower income household, and we'll look at how little that is, that spends more than 30% of their gross income on housing costs. So there you're at 35.7%. You're by definition under housing stress if you're in the lower income. Now, if we have a look here, we'll go to economy and we'll go to, where is it? Hang on, I'll bring it here. There it is. Nope, wage prices. Here it is. House price, the different income levels. So if we have a look at the top there, highest income, it's over $2,000. You could spend 30% of your $2,000 and you're over 30%. And technically, on some interpretations, you would be under housing stress or mortgage stress. But not really, come on. You're earning that much money, you've definitely got the capabilities, you're probably putting a big chunk of the money away in something else. So you've got a pool, you've got a reserve. I mean, if you go right to the bleeding edge and have no reserves, earning that much money, well, then you just go to ABC and they'll do an article about you. Middle, you're talking 930, but the lower end, $430, guys. So you're not talking a lot of money there. So there's probably no chance to even get into the market if you're at that level. According to the report, the average home loan amount has risen by 248.7% in the past 20 years, while loan repayments have increased by 179.4%, and family income has increased by 112.8%. Housing was least affordable in September 2008, when almost half, or 45.8%, of income was required to service a loan. However, as property prices climbed, the REIA said that this could become a greater issue in the future. The average home loan in 2021 is $548,000, up, just compare this, oh boy, up from $157,000 in 2001 and 407 in 2016. Housing debt to household disposable income for owner-occupier housing rose by 51.4 percentage points between the start of 2001 and March 2021, and 48.8% to 102. In the first home buyer segment, access to the housing market was at its highest in June 2008, when 48.2% of all new loans were from this cohort. In contrast, first home buyers comprised only 21.8% of new loans in March 2004. By June 2021, first home buyers made 37.2% of all new housing loans. The report explained that first home buyers entered the market at comparably higher levels in 2009 and 2020 due to wholesale government stimulus measures in response to the GFC and the coronavirus pandemic respectively, including grants and stamp duty waivers. REIA President Adrian Kelly commented that affordability would likely worsen as interest rates rise if policy settings fails to change and household disposable incomes do not rise through, for example, tax concessions for first home buyers. Tasmania. Across Australia, Tasmania recorded the largest deterioration in housing affordability, 12.6 percentage points over the past 20 years, with the proportion of income required to meet loan repayments increasing from 18.4 in 2001 to 31, so housing stress, in June 2020. Average home loans surged from 342.6%, from 86 grand to 350. That's still pretty low. While family income increased 110% and average home loan repayments by 254. New South Wales, housing affordability plummeted 12.4 percentage points in New South Wales over the past 20 years, with the proportion of income required to meet loan repayments rising 31.8% in June 2001 to 44.0% in June 2021. Average loan amounts increased by 269.3 to 191,000. Whoa, wait, what? Whoa! 191,000 to 700 grand. Shit. Sorry for swearing, but damn. While family income increased by 112%. Average home loan repayments were up 191. What about Victoria? How are we looking at here? Repayments up 26, so the loans are up from 157 to 568. This is average, guys. These aren't the special super duper houses. Sure, they'll be pulled higher by the luxury stuff, but they'll also be pulled lower by the poor stuff. Home buyers were 40.9%. Queensland, housing affordability is down 5.9%. Repayments up 26.2. So now we're talking 32.1%. That's how much you need to make. So Queensland, we're in mortgage stress or housing stress. Victoria, housing stress. What are our loans? From 140 to 460. South Australia, affordability down 10.1%. Loans from 113 to 401. And they're also in mortgage stress. WA, housing affordability declined the least. Okay, repayments were up 22.4. They're not under stress. They're the only ones that aren't. From 139 to 430. They've got all their iron ore though, so hopefully that will create the advantage. Housing affordability dipped 3.1% in NT, and we're talking still not mortgage stress, 23% only, 126 to 393,000. So there you go, everyone. Home loans, housing affordability, mortgage stress, it's all spiked. What's the solution? What's the solution to this? Well, let me jump on my... Well, there's a few suggestions. One is to look at the government interventions into the economy that are helping juice the market. Home builder for one. It's just recent. You've got these 1%, 2% mortgages, 5% mortgage. Oh, wait. Sorry, the 1% ones don't exist yet. Let's hope they never do. But you've got 2% guaranteed home loans, government guaranteed home loans for single parents. And I can understand people wanting to get into the property market and to encourage that. But all of this stuff, it just bubbles up housing. You've got negative gearing, incentivizing people to make a loss in the housing sector under the argument that it'll make cheaper rent. Well, Doesn't seem to be working. It just means that those people now are forced to rent because they can't afford to get into a house. It's just a whole mess. I'd love to see a progressive phasing out of negative gearing over time. Let's get rid of that tax break. And then, but people are losing money. Well, then up the tax-free threshold. There you go. Get rid of incentives. That's the solution to this. Will there be the political will? Will it happen? I really doubt it. Honestly, I don't think there will be the political will, particularly when you have generations now receiving houses, inheriting them. Yeah, it's not going to change. What do you think? You think it will? Let me know your thoughts and opinions on this one in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon, sign up for SelfWealth or Stake, use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband, buy our merch, our lovely pocket squares, which I'm actually wearing one now that you can't see. Whoop. There we go. Use Gold Pass from the Perth Mint or support us via PayPal. Take care. Have a great day. See you next time.